Howdy folks, and welcome to the Daily Coin. My name is Rory, and today is Monday, May the 15th, 2017. And I have the very distinct honor and great pleasure of welcoming back to the show Marketing Director for Miles Franklin. And before Andy Hoffman joined Miles Franklin, he was on Wall Street for 16 years, and he spent 5 years in the mining industry. And as most all of you know, he's been writing since about 2004. Andy, welcome back.
Oh, thanks. And actually, this very week is my 15th year anniversary in precious metals. I bought a couple of hundred shares of Newmont Mining back in May 2002, and a second and third career have been launched since. And I couldn't be happier with all the great people I have met and all the things I've learned over the years.
Well, we're certainly glad that you discovered precious metals and that you do what you do, because you keep us well informed, and we certainly appreciate it. And I want to start with silver. And it appears, Andy, the recent 3-week beatdown in silver, for now anyway, is coming to an end. And what's going on with silver from your perspective?
Right. Well, there's many things. I look back to what happened right before the Save Our Swiss Gold referendum at the end of 2014, when there was an historic propaganda campaign led by the Swiss National Bank president Thomas Jordan to denigrate gold and push the price down and make people think there was no use for it at all. And right after they got that referendum to fail, immediately the price went right back up. And similarly speaking, we had this French election, and look, I can't speak for how the people of France are going to vote, but clearly they were scared that Marine Le Pen's victory would be, as I called it, a Brexit times 100 event, which it would have been from a financial standpoint, economic standpoint, political. And even though it was an historic election in that the equivalent of the French Democrats and Republicans didn't even make it to the final election round, she did not win. And part of the reason, I believe, was because of all the propaganda that went up into it, including the soaring stock markets and pushing the price of precious metals down. In fact, in the case of silver, the cartel resorted to an all-time highest commercial short position, all-time highest, never before in the history of the COMEX. The only time they were even close was right after the Brexit, when they had a real reason to try to push prices down. I think the reason was to quell fears ahead of that election, so that people wouldn't worry that Marine Le Pen had an advantage. And sure enough, as soon as the election is over, they start massively short covering. They've already covered 40% of their short position. And what do you know? The price of silver bottoms at a higher low than before, and the same with gold. In fact, gold at 1233 as I speak is just $6 from its 200-week moving average. And again, in the case of both precious metals, not only were the 200-week moving averages, kind of lines in the sand that the cartel was desperately fighting for weeks, and in fact, both metals got above them for a few weeks right before this election, but also gold's 5.5-year downtrend line, which is at about $12.85 per ounce right now, going all the way back to the top in 2011. So we're talking about some major technical levels that they were protecting, and also some psychological levels in front of this historic election. And what has it done? I mean, it's bought them a little time, but as we've seen in the inexorable tightening of the physical markets, we now learned that, as I predicted for years, that the silver production is now in decline. It fell in 2016. It plunged in gold, and it has nowhere to go but down. So we're seeing declining production. We're seeing rising demand and less inventories around. So you're going to see a series of higher lows. And in this case, now they're covering the short. So probably as we move forward throughout the year and the economic data continues to weaken, because it's basically at its weakest point that it's been for years, there's going to be more and more upward pressure on prices.
I would agree. And you touched on two things there, Andy, that we're going to get into in just a moment. But I want to look at the economic data here. And it appears, Andy, some of the sins of the 2008 meltdown are beginning to surface. And the paper charade, as you pointed out, is beginning to fade. And if the West, the U.S. in particular, if the U.S. announces another round of QE or does some other form of monetary magic, I mean, would the East, namely China, would they stand idly by? Or said another way, what would you see? Not asking for some crystal ball prediction, just your thoughts. What would you see, Andy, as a possible unintended consequence of such action as a QE or some other illusion coming to the surface?
Well, when you're talking about the West doing QE, you're talking about the Fed because the rest of the West
Yes.
already is doing it. Right
Yes.
now, as we speak, the combination of the Bank of Japan and the ECB is the largest amount of QE cumulatively for the world ever, surpassing what the Fed had done even at its peak. And in fact, I was just looking the other day, as it turns out, the ECB and the Fed and the Bank of Japan now have identical balance sheets of $4.5 trillion. It's just that the Fed built theirs up a little sooner and slowed it down, and now the other two have caught up. So when you talk about will they announce QE, well, look, the Fed will announce QE when there's a crisis, and at present they've gone all out, particularly since our election, to prevent a crisis from happening. I mean, this is the we have the longest streak of the VIX closing below 11 in history. And this is at a time where we may be at war with North Korea any day, in Syria, and our economic data is plunging. I mean, our GDP is zero at best right now, and the data is just falling apart everywhere. So again, there's an historic level of manipulation of markets that are just trying to keep what's going as best they can. And when it comes to precious metals, look, we saw a 50% increase in paper trading in 2016 just to keep prices down, and now another stair step higher. Like I said, a record short position. So a 50% increase in paper trading of gold and silver last year, and an even bigger increase this year, just because the demand is so high. And right now, the people in the investment community still haven't figured out that the way to hold precious metals is in physical form, not in these paper forms, which can be rigged down. So I think what you're going to see is the economic data is going to continue to weaken, and the Fed is going to continually be pressured to go back to doing what they were doing, and or at least what they were doing overtly, and what the ECB and the Bank of Japan are doing right now, which is to overtly hold rates down. Because, I've talked forever about how interest rates, I called the top in interest rates on the 10-year at 2.5% way back in January, just like I called it at 3% back in 2013, because the economy cannot handle higher interest rates. And eventually rates are going to have to be monetized, our bonds, to get rates back down. That is without the bond vigilantes coming in and pushing rates back up on their own, because there's no way that all the things that need to be done in this country can be monetized otherwise. And keep in mind, we have a debt ceiling that's going to be coming within weeks, months at most, in which case, all the exponential debt that's needed just to keep the system going is going to have to be increased. And so when Congress does that, they're going to have to do QE, and let alone if Donald Trump ever gets any of the things that he wants done, like tax cuts and fiscal stimulus, which I've said from the beginning he's not going to be able to get done. So again, there's going to have to be a QE in the future, a QE4, but the only way it's going to happen is going to be crisis. And we're going to have a crisis, be it due to a geopolitical concern, the debt ceiling, or the force of the collapsing economy here. It's one or the other or more, and it's going to be coming probably later this year.
I would agree. I think it is coming this year. And you mentioned silver mining production being down in 2017. It was just a small fraction according to the Silver Institute's report. And personally, Andy, I see this as a sign of what's to come beginning this year, with larger declines being announced, is the lack of capital inflows into the mining sector now catching up. And are we going to see further declines for the next couple of years before all these new exploration mines and juniors begin coming online?
Well, I don't think there's going to be any juniors coming online, because they're the ones who have had the most capital taken away. And that's, I talked about I worked in the mining industry from '06 to 11. So it's been 6 years since I've been in that industry. And that industry was dead 6 years ago. And there's been even less capital and more capital strangulation since then. I mean, there's been no material discoveries in this sector in the 15 years that I've been in it. And so, yes, yeah, the decline in 2016 of silver production was small because it's like a Titanic. It's turning around slowly and going in that direction. Back in 2014, on the first Miles Franklin Silver webinar panel, we predicted this, and here it is. And we just had our third webinar, All-Star webinar panel for silver a couple of weeks ago, and we predicted that production will continue to fall for years to come. In fact, in gold, see, silver is a little more difficult to forecast because it's mostly a secondary metal, so there's not a lot of forecasts out there. But in gold, the mainstream is out there. I've written about the forecast from Credit Suisse and Standard & Poor's. Gold production will fall 25% in the next 7 or 8 years worldwide. It already peaked in 2015 like silver, and it's forecast to fall 25%. I mean, 25%. This is at a time when every other commodity is surging. In fact, the only other one I could think of where production will be falling, aside from gold and silver, is platinum. So there you have it. So production will be falling. Of course, demand is going to keep going up as the currencies of the world, the fiat currencies, are destroyed exponentially over this time. And all the inventories that were above ground, that were being used to hold prices down, are pretty much on fumes right now, as they have been used, like all the Fort Knox gold for decades. So I think we're going to see a critical point just in the economics 101 supply and demand, let alone the monetary demand that would drive it higher, even if production was rising.
I don't see production rising at all for a number of reasons, including everything that you just listed right there. And want to tie silver and the economy together, because in the Silver Institute's report that I reported on last week, the consumer-based silver products, jewelry, coins and bars, silverware, electrical, and electronics combined for a drop of around 15%. And we already know Silver Eagle sales are off by some 60% or more for the first few months of this year. Is the consumer just that saturated in debt to the point to not even being able to afford a $20 Silver Eagle? I mean, is that how bad it is out there?
Well, the consumer is saturated in debt and can't afford much of anything, but I don't think that they'd be buying Silver Eagles right now anyway, because 99% of the public doesn't even understand, investments, let alone that an investment alternative would be physical precious metals, and let alone all the propaganda that tells you otherwise. I mean, we are, as I wrote last week, we have right now .com valuations in a Great Depression era, and it's because of all the propaganda that has pushed people and the market manipulation into these overvalued sectors, which are falling apart. I mean, there's evidence everywhere of all the excesses in real estate that are here again. Bonds are obviously at all-time highs because of all the monetization, and stocks because of the PPT. So, right now, the average person, it can't afford anything. That's why retail sales are literally plunging everywhere, putting the entire industry out of business right now. And, the people that are going to own physical precious metals are not going to be the 99%. Well, maybe the top end, maybe the top 2 or 3% of the 99%. But it's going to be the people on the margin who have been investing in paper assets and realizing that the paper assets are overvalued, and that the physical precious metals are undervalued.
Do you think that we're currently in a depression, a recession, or how do you see where we're currently at as far as the economy? I've been saying for about a year that we're in an economic depression. I mean, if you look at the real numbers, in particular what John Williams over at Shadow Stats reports, it appears that we are in fact, a depression. I mean, would you agree, or am I just off base?
No, I just said my podcast 2 weeks ago was called .com Valuations in a Great Depression Era. In fact, I wrote back, it was probably 18 months ago, where I wrote the worst economic activity of our lifetimes a year and a half ago. I mean, and it really was. And when you compare where we are today to where we were then, where, I mean, look, industrial production has probably fallen every month since I wrote that article. Retail sales, durable goods orders, factory orders, you name it, across the board. Excuse me, my cough caught up to me. And again, interest rates are no higher than they were back then, and most of the world's currencies have lost purchasing power over that time. So yeah, we are, this is unequivocally the worst that we've had. Our economic times, our lifetimes, and certain countries change their economic data to make it look a little better. But even here, we're the kings of rigging our data, and right now our GDP is hovering around zero. China, which actually China is the super kings of rigging data, their economic data is the worst since they've ever started putting out data in the 30 years they've had it. This is the lowest it's been. So, and there's oversupply everywhere. So yes, this is the worst we've been. It's also the highest amount of debt we've had. And the interest rates have been pushed down to, for all intents and purposes, 5,000-year lows. So unless they can be taken lower, i.e., we go to negative interest rates here, they have nowhere to go but up, which is only going to put further strain on the economy.
As I'm sure you're aware, Andy, all the heads of the One Belt, One Road are all meeting. They began meeting yesterday and today in China. We learned in February 2016, gold is going to be moving along this One Belt, One Road. And whether it's going to be used for settlement or simply deliverable is kind of, it's a little cloudy at this point. We learned within the past few weeks, both Moscow and Beijing will be opening physical gold markets to help facilitate gold acquisitions for the other BRICS members, including Mexico, which Mexico, been talking about joining the BRICS. The Dubai commodities market, where physical gold is traded primarily for the Muslim world, has already introduced a digital gold offering. That's a lot of gold news. What do you think is going on with all these new markets, gold trade, digital gold coming online in the form of, James Turk's Gold Money, got the WeChat app in China, got the CME announcing a new gold platform running through the blockchain in conjunction with the UK's Royal Mint. Is the world preparing for gold to re-enter the monetary system?
And don't forget the Sharia law, which now allows gold to be purchased by tens of millions of Muslims. But yes, I mean, look, there's a shift toward gold, and more importantly, it's a shift away from fiat currency. And China's going to be leading the way. It's not necessarily because there's going to be a gold standard. There's just going to be more of a usage of things of real economic value. And a shift away from fiat currency as people in the world lose confidence in it. Right now, gold is really the only settlement mechanism the world still has, but that's only going to be used on a large scale basis because it's too. I mean, now that we have cryptocurrencies coming around, we're going to have multiple avenues for the world to execute trade outside of fiat currencies. But generally speaking, from a storage of value standpoint, the nations of the world that are not trying to preserve the dying status quo, led by the United States, are going to be using more physical precious metals as a way of storing value and perhaps trade.
That's what I see as well. I think that gold is going to become part. I mean, do you think that you and I will be able to use gold at that point once it's being used at the global settlement level?
No, I don't believe gold will ever be there'll ever be a gold standard because governments will never be again trusted to issue currency, whether it's gold backed or fiat backed. I think gold will always be a store of value. And everyone from the small investor to institutions will want to hold on to it because it stores value. And perhaps, like the Chinese and Russians, they may actually do some trade settlement as a result. But going forward, we're going to need to drastically change the monetary system. It's going to be one in which the governments don't have as much say. And that's because that's been the problem. That's been the root of all of our problems has been governments destroying currency systems, whether they're gold backed or not. And so I think we're going to see a new paradigm in money throughout the world in the coming decades, which involves in many ways cryptocurrency. But when it comes to a store of value, one thing that never changes is that precious metals, as they have for thousands of years, will be the best ways of storing your value.
I couldn't agree more. And Andy, I'm not going to take up any more of your time, and I certainly appreciate all you've given us today. I know you're not feeling too well, and we've been speaking with Andy Hoffman, and you can find all of Andy's great work over at milesfranklin.com. And Andy, if you would, give them your phone number and your email so that they can get in touch with you.
Right. Miles Franklin Precious Metals. We are in our 28th year of business without a single registered complaint. I write every day for free at milesfranklin.com and do podcasts like this all for free. And you can email me at ahoffman@milesfranklin.com.
All right, Andy. Well, I certainly appreciate it and get to feeling better, and we will talk with you soon.
Great. Thanks.
Thank you.